You know, it's a tough pill to swallow, but most crypto investors lose money. And here's the crazy part. It's usually not because they picked the wrong coins. Nope. It's because their timing is all wrong. Today, we're going to dig into the single biggest reason why that happens. It's this epic battle, right? FOMO versus discipline. We're going to break down exactly why this emotional tug-of-war costs people so much, and, most importantly, how you can come out on top.
Okay, let's be real for a second. Have you ever done this? You're scrolling, you see a coin just absolutely taking off. It's a green rocket ship on the chart, and you feel that knot in your stomach, right? That panicky little voice saying, get in now before it's too late. And you just hit buy. Yeah, I think we've all been there.
That feeling, that exact impulse, that is FOMO, fear of missing out. And man, in the moment, it feels so urgent, so right. But let me tell you, it is the single most destructive emotion you can have in investing. It is, without a doubt, the #1 reason people's portfolios just get absolutely torched.
All right, so let's really pull this thing apart. We're going to get into what this FOMO trap actually looks like. Because, the first step to beating the enemy is knowing exactly what you're up against.
So at its very core, FOMO is all emotion. It has nothing to do with analysis. It's just pure anxiety. It's like this deep psychological trigger, Our old school herd mentality just kicks right in, screaming, hey, the whole crowd is running that way. They must be right. We're going to get left behind. And that feeling, that panic, it pushes you to do something impulsive, usually buying way, way too high.
And we need to be crystal clear about what's going on here. When you're in the grip of FOMO, you are not making a decision based on data. Let's be honest, your financial advisor at that moment isn't some detailed chart or a project's white paper. It's Twitter. It's some random person in a Discord chat. And that, my friends, is a recipe for absolute disaster. And this cycle, it's so predictable, it's almost painful. I mean, think about some of the big hype coins we've seen. It always starts the same way. First, the chatter kicks off online. Then, boom, the price just goes vertical. That's when the hype hits a fever pitch, and it triggers this huge wave of FOMO buys from everyday investors. And what happens right at that absolute peak? The insiders, the people who got in early, they're selling. And the price? It collapses, leaving all those FOMO buyers holding a very, very heavy bag.
Okay, so now let's talk about what this actually costs you. Let's look at the brutal but very real damage this emotional whirlwind does to your wallet.
Here's the journey, step by miserable step. First, you see the hype. Then, after fighting it for a while, you finally give in and you buy, probably somewhere near the top. But then, almost right away, the price starts to tank. Panic just floods in. And suddenly, that fear of losing everything is way stronger than the hope you had of making a profit. So what do? You sell low, just to stop the bleeding. You've just locked in your loss. You bought high and sold low, the literal opposite of what we're trying to do here.
And this is what that journey actually costs. Someone caught in this trap, they don't just lose a little bit. We're talking about devastating losses. Like more than half of their investment just poof, gone. This single number right here, it represents the very real pain of so many investors who let emotion, not a plan, drive their decisions. But listen, it absolutely does not have to be this way. Seriously, there's a calm, strategic, and way more powerful alternative to all this FOMO chaos. So let's talk about choosing strategy over stress.
Just look at the difference here, side by side. It's night and day, right? On one hand, you have the FOMO investor. They're totally reactive. They buy when the social media noise is at its absolute loudest, and it's all driven by emotion. But then you have the disciplined investor. They're proactive. They buy at regular, pre-planned times, no matter what the hype is doing, because they're following a plan. And the results? Well, they couldn't be more different.
So what's the disciplined investor's secret weapon? Well, a lot of the time, it's a strategy called dollar cost averaging, or DCA for short. It's actually super simple, but it is incredibly effective. The idea is, instead of trying to perfectly time the market, which is basically impossible, you just invest a fixed amount of money at regular times, say every week or every month. That's it. You completely take emotion and guesswork out of the equation.
And check this out. This is the magic of DCA right here. In January, let's say your $100 gets you 100 coins. Simple enough. But then look at March. The price has dropped by half. Now, a FOMO investor would be freaking out right now. But you, with your DCA plan, your $100 now buys you double the number of coins. You are automatically, without even thinking about it, buying more when the price is low. This just keeps driving your average buy-in cost down over time. It's brilliant.
And all of this really boils down to one core idea, a philosophy that should be behind every single investment decision you make.
This right here, this is it. Burn this into your brain. Discipline beats hype. Every single time. Hype is temporary, it's loud, and it's dangerous. Discipline, it's quiet, it's consistent, and it's what actually makes you money in the long run.
So, this needs to be your new mantra. Stop letting a trending hashtag on Twitter decide your entry point. Your entry point should be a boring, pre-planned action based on your strategy. Let your calendar decide when you buy, not a bunch of anonymous people shouting on the internet.
Okay, so let's get practical. What does this all mean for you right now? How do you actually put this stuff into action? Well, here are the rules to live by.
Seriously, these are the principles to follow. Your strategy is so much more important than your timing. If you can, automate your investments. It's the best trick in the book for taking emotion out of it. A consistent plan will always beat chasing some lucky lottery ticket. Focus on the long term, not the short-term noise, and really let this last one sink in because it's so important. The gut-wrenching pain of losing half your money because you timed it wrong is infinitely worse than the small sting you might feel from missing out on a pump.
So, I'm going to leave you with this one question to think about. The next time you see a coin just going absolutely parabolic, what are you going to do? Are you going to let that anxiety, that hype control your financial future? Or are you going to take a breath and trust the plan you made? The choice between being a reactor or being a strategist, well, that's completely up to you. Make the right one.